Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 23rd of May here in 2023. It's felt a little bit strange today that it was actually a red day in the market. Red day meaning it felt bigger than it was, but the S&P by the close was down 1%. The Nasdaq, our tech-heavy leader, was down a little bit larger, down 1.2%. The Dow was down 0.5%, and the Russell was our relative strength leader in today's session, was actually up 1% at the high, but closed the day down about 0.33%. And that's where we begin our video for this update. Crude actually was the big winner of the trading session, just playing a little bullish bounce. That's actually the play to the upside, at least in terms of the range right here, just getting a bounce back inside. You can see that on the profile to the right, but nonetheless, crude was the big winner, and that boosted the energy sector, XLE, which itself is holding a little support shelf on this daily chart. 77.50 or 77 thereabout is a little support shelf for price. And that was on the back again of crude. Splitting that apart, the Russell had its strength in two sectors, the financials and energy, and a few others over here. At one point, this whole trading, or this whole grid, this market watch visualize tab, was all green just about. But the Nasdaq spent its day all red because our leadership in Google, Microsoft, Nvidia, Apple, Tesla, a little bit of Meta, and multiple other stocks were actually down on today's session. So we had the split go in reverse with tech weakness and financial and energy, and therefore small cap Russell strength. In tonight's video, we're going to focus on some of that and plan the week ahead. Let's actually start there. In today's session, just looking at where we had our earnings play, Lowe's was an earnings announcement before the market opened. So not going too far, was actually up on the session, about 2%, again came down from the high. So Lowe's had its earnings tomorrow. Actually, I will show this, which is from a coaching session here in the TheoTrade chat. So Tuesday we had Lowe's. Wednesday we're going to have Nvidia. And Nvidia is going to be a big one that we'll have our eye on after the close on Wednesday. After that we'll have additional retail name, or at least a Costco would be another. We had Target, some of the others, but they're big box retailers. Costco will announce their earnings on Thursday. No earnings on Friday, but we do have the inflation numbers and PCE-PI and consumer sentiment. So Friday could be a big session, and we have a holiday on Monday. Starting there, Nvidia, which is a stock that continues to be strong, getting stronger, and the pullbacks are the trades on the way up. That's your bullish moves into it, is overextended and is, I'd say, finally trading down from the highs, which makes sense. In an overextended market, you tend to get the next move to be back to the downside. And this is, or does have, a larger uptrend in motion. That's where my attention's focused, but we can't be bullish every single day. And the market, for this point, Nvidia will go into earnings tomorrow's session after the close with a bear position and a bear move down from 320, maybe all the way down to 300. Just a quick peek at where the market's pricing its earnings-based move right here, 95% on the implied volatility, which means $21 up or down. So we'll know that tomorrow's session after the close. But if you're positioning into Nvidia, that's a stock to look at for tomorrow's session. We talked about Costco, but also Medtronics will be its announcement before the market opens. That is on Thursday. But Costco will be the next thing we're watching, and that continues to be in a trading range or a sideways move. Most of the markets, I'm talking crude and bonds for that matter, and a lot of sectors themselves are in trading ranges, so not a lot to do, at least from my perspective, going long at the bottom or short at the high of the trading range. Bringing us back to where we've been the last few weeks, and especially in the updates, my sessions, and the evening videos, we are bears. Why are we bears? Not because it feels good or bad or indifferent, but because the market, the last time we've seen it, into 4200, with the exception of one, has taken a downswing. Some of them are very small. The recent ones were very small, but others have gone on to play for 400 handles, and a few others have been a little smaller or larger than those. So no, it is not a prediction, but again, no change, and that the reward pathway, this will go for individual sectors and stocks as well, is at least to the middle for maybe down to 3800. We will have the debt ceiling, and that's just a variable that nobody can predict necessarily, but it's something to watch in terms of volatility. We'll focus on earnings, we'll focus on the PCI, we'll focus on anything else with inflation for our trading logic. Nonetheless, that is a sell swing from there. Financials are already back to the middle. Nothing to say there, but technology actually is, with the Nasdaq, the strongest. But note where it is at the top of its trading range at 14,000. That's in the Nasdaq. So a little stronger, but it does have a pullback on deck or on hand. It's going to have similar patterns or similar price to leading stocks. For example, we'll take a look. We just saw this. We saw Nvidia, which is a strong stock getting stronger, but Microsoft is up there as well. Just hit a new 52-week high. Believe it or not, I know the market was down today, but Microsoft did pierce just for a little bit to a fresh new 52-week high. It's on a sell swing as well, temporary or short term. And other stocks that are in the leading side of our market or the Nasdaq are similarly, which includes the stock that we all love to hate, myself included. It's Meta. Facebook Meta. It's just about pushed up to a new high, but it does have the pullback look to it. Now, if a trend does continue, it's higher highs and higher lows, but that's a trend. A trend is not this. That's impossible. The market to go straight up. It goes up, down, all the different things. And to me, in an uptrend, we want to look to buy pullbacks or retracements on the ongoing trends, so focus our attention on the pullbacks. But if you like to fade or go short, this is your moment. You've had a few moments to get it back down to these moving averages or back down to a lower price level. So those would be considered the fades, and these would be considered the flags. They're both F. Fade or short from above, and on the way back, flag on the way up. It's a different way perspective. I like the flags on the way up, but it's not just that. Stocks like CVS are flags on the way down, fades on the way up, just in terms of putting trades in the direction of a moving trend, which is to the downside in some of the stocks and uptrend in the others. And getting away from stocks, before we end the video, let's take a look at crude oil right here. Just putting it into a context, not any fundamentals about recession, which would pull crude to the downside, or recovery, which would send oil back to the top. We won't talk about that just yet. We'll just look at the probabilities and the range. Maybe call tonight's video another home on the range. Nevertheless, oil does have a little better spot to trade back up, just about to 78. And we've seen the sell side targets get there in my positions, or the logic in the bond market, which is actually taking it back to the lows. So remember the comments and the trade logic to get us short or bearish down to the bottom? That's what we're looking for in an ideal world for the S&P. And that played out in the bond market nicely. I look at TLT. I actually will trade TLT. I don't trade the bond futures, but I do trade TLT from time to time. And it's in a trading range just like the S&P. So again, this has a 108 and a 100 with a mid or the middle about 104. Again, I don't know the future, but I can quantify risk, and that's all I can do with the trades, us included as traders. So when the market has achieved downside targets, the next move has been up. And when the market's achieved upside targets, the next move in price, again, it took a little time, has been down. And that sets up, again, short trades here, long trades there. No different than the spider or the S&Ps. Short trades will live here, long trades will live there. And in the flip side of the bond market, this is something to keep our eyes on collectively here in TheoTrade. And it does tie into that debt ceiling. And the logic's going to be if the debt ceiling goes a little closer than expected, or maybe tips over the edge, you're going to see yields go to the upside. You'll see bonds go to the downside, breaking lows. You'll probably see stocks go to the downside as well, which fits into that thesis. But enough about that. Let's just finish the video with a discussion quickly on yields. TNX is our 10-year government treasury yield. We've seen it up. That 40 is actually 4%. 30 is actually 3%. We have come down. We've stabilized about 3.5%, 3.5%, but we have seen the last few trading sessions go to the upside. That is what we would expect. But it's not technical analysis that makes these things happen. It is the necessary for higher rates or the risk that the market is putting in to the future, and that is pushing rates to the upside, pulling bond to the downside, and we'll see which direction that S&P goes. We'll finish up saying the reward pathway is still down, and that risk pathway is up to 4400. Always be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May 23rd, 2023.